Recording it now. Okay. Thank you all for joining. Thanks for this massive crowd today on the Zoom. Appreciate it. Guys, today we're going to speak about psychology and risk management. I feel it's a very important subject that we talk about, psychology and risk management. It's one of the most, or two of the most important things when you trade. It's basically your trading foundation. So even me, myself, I've been a year in now, I'm still struggling with discipline, with losing and winning streaks, and even consistency. I'm really struggling with that, to keep consistent. And that's a major part of trading, is to be consistent and patient. So to start off with discipline, guys, like discipline is probably like it can be integrated into a lot of different things, but discipline itself needs to be done. Like you need to set stuff for yourself, and keep at that. Like, let's say you build a trading plan for yourself, you have to be disciplined to follow the trading plan. If you don't have discipline, you're not going to follow the trading plan. If you don't have discipline, you're not even going to have a trading plan. You're not going to build out for yourself a trading plan. You're not going to how can I say, like, focus and hone in on actually growing yourself as a trader and actually becoming profitable. People really think the trading game is easy, because there's only two ways the market can go. It can only go up or down. But the problem with that perception is that once you get to the market and you start losing, and you don't understand why, because it's a 50-50 chance, and the market is at a support or resistance level, so the market should fall or should go up, and then, like, people basically gamble. Like retail traders, that's why 80 to 90% of retail traders actually lose money, is because they gamble. They don't know what they're doing. They go into the market unclear, so they don't have clarity about the market. They think they understand the market because they know, like, okay, the stock market and the forex market has to go up, has to go down. They try and find their entries, and what they do is they get into a trade, they let the trade run, and hopefully it gets into profit. If it doesn't get into profit, they're going to leave that trade until it gets into profit. Now, that's a mass psychology of how most people actually trade. So discipline is very important, because discipline, you're going to handle your trading like a business. You're going to handle your trading like you would your job. Like any job you work for, if you work for a boss or even your own company, you have responsibilities. You have to do certain stuff to make sure you get your job done and you do it properly and professionally. If you don't, you're not going to get paid, or you're going to get fired, or you're going to get a warning. It's the same with trading, guys. People think differently when they trade, because they think, okay, the ball is in their own hands. But because the ball is in their own hands, they're not going to put so much effort in, because there's nobody holding them accountable for anything except themselves when they lose money. So it's very, very important to handle trading as a business, and to get yourself educated. And when you do, get disciplined in everything that you do with trading. Now, that is if you want to take trading seriously. Obviously, if you don't want to take trading seriously, you can just gamble and try and guess where the market's going. But it's very important to keep disciplined. So guys, I'm going to go very quickly through this, because there's other stuff we want to talk to as well. So losing and winning streaks, the thing I can say about that is, basically, when you're on a losing streak, you're going to feel sad. You're going to try and get your money back. You're going to feel emotional about your money. And that is going to happen to everybody. Everybody gets to a certain point where they have a losing streak. Every professional trader will tell you they're not profitable like 90% of the time. Maybe they have a month where they're 90% profitable, but then the next month they will be 40% profitable. And that's just the win rate, I'm saying that. So losing streaks will happen. Winning streaks will also happen. And it's very important when you start getting identifying you are on a losing streak, to pull your emotions out of it and realize that it's normal. It's not abnormal to be on a losing streak, but that's where the winning streak comes in, and where you can actually up enough capital to have, and vice versa. But now on a smaller, like when we talk about an intraday losing streak, like if you start losing, it's very, very important that you don't go and revenge trade. That's a problem I struggle with till this day, and it's very important for you to build the right habits from the start, to not do the same mistakes that we went through. Like, it's because you don't have to. It's bad habits that I've learned from the start, and now it's very difficult for me to unlearn those habits. I'm still profitable, but I would be way more profitable if I don't have that bad habit of trying to revenge trade and trying to get my money back out of the market when I took a few losses. And the same with the winning streaks, guys. If you're on a winning streak and there's a lot of dopamine going off in your brain and you're like on a high and you really feel like you're on top of the world, that's when you're going to lose money, because that's when you're going to start over trading as well. You're going to think, okay, now I pocketed, like I took my $100 account to $200 in the first 2 days, so I can double it again in the next like day or whatever. And you take bigger risks because you believe in yourself and your skill, and then you lose. And then you feel depressed because you're losing, because you don't understand how you actually lost all your money with just one trade, because you were on a winning streak now of 5 trades and took your account or doubled your account. So it's very important to identify when you're on a losing and winning streak, and then take your emotions out of it and just take a step back and rethink everything, and realize that when times are good, times will be bad again. When times are bad, realize that times will be good again. It's like this vice versa thing, and it's very important to just find a balance between those, because the balanced trader will always be on top. Not the guy that is egoistic because he has a lot of wins, or the guy that's depressed because he has a lot of losses. It's very important to take emotions out of it. And then clarity and perception. So clarity and perception. Okay, let's start with clarity. So you can only get clarity of the markets when your perception of the market kind of gets proper, or you get the right, correct perception of the market. A lot of people have the wrong perception of the market. A lot of people have the perception of the market: buy high, buy low, sell high. And it can't be further from the truth to to buy high, like sell high and buy low. Like, yeah, to a degree it is like that. But when I started trading, I remember, like, I was literally just looking for those high points and low points. And once the market went to those low points or high points, I would sell and buy, because that's the perception I had about the market. So I wasn't clear on my trading. I wasn't clear on what I was doing. So when I was losing, I didn't know why I was losing. And when I was winning, I didn't know why I was winning. So it was kind of, I felt good winning. Like, I felt on top of the world. It felt like I'm going to get rich very soon. But again, my perception was wrong. So I didn't have clarity on what I was actually doing. And once you get, well, once your perception of the market changes, and it changes every day. It changes for me till this day. It will still change for Michal, and he's been trading now for 6 or 5 years. So I mean, and still to this day, the perception of the market keeps changing, because the market keeps changing and evolving. So you have to adapt and change with the market. It's very important. But to get there, you first need to get the correct perception of the market and what the market actually is and what moves the market. Now, we're not going to get too into depth about what actually moves the market and all that. You'll learn as time goes on. But it's just very important to notice that you don't know anything. Like, you have to come to realize that you don't know anything about the market, and be humble and start to learn what the market is all about and get the right perception. And once that happens, you're going to start getting clarity. And clarity is a massive part of your trading success, because if you don't have clarity, if everything is cluttered, you're using too many indicators, you're using too many different strategies, because now you starting on one strategy and now you're jumping through different strategies just because that strategy isn't making you profitable. In the meantime, it's not the strategy that's the problem. It's your mindset and the way you apply the strategy that's the problem, and your perception of the market that's the problem. So that's all I have to say about that. But really important to just notice that you have to become humble and know that there's a lot to learn still. And then consistency and patience. Now, that's probably the thing that I struggle with the most. And I know I'm getting better at it, but I'm telling you guys that it's difficult. So you can take it serious and start handling it the right way from the start. So consistency is probably the hardest thing with trading. not only to be profitable consistently, but to actually keep and stick with your trading plan consistently. Because it's very easy to make a quick buck with Forex, and then, well, it's not easy, but let's say you have a good trade. Let's say you have a proper trade where you pocket, like I remember 2 weeks ago, there was a few trades that I dropped. We pocketed about like 10,000 pips in the first 2 or 3 days of the week on NAS. Now, that's abnormal results, but it's very important to realize that you're not going to get that results always, and that you don't have to chase those results when you don't get that result. So because people tend to chase the results, and then they start losing, and they're not consistent with their trading plan. So they use bigger lot sizes, they adjust the stop loss too big or too small, or they try different things. They don't, because they're not getting that same results that they got a few weeks ago, and trying to get that again and trying to chase that result. It's very important to be consistent with your trading plan. If your trading plan states that you're only trading certain time frames or to certain times or certain strategies or certain pairs or certain risk reward ratios, stick to that until the strategy or the trading plan proves otherwise. Then you can adapt and change your trading plan, not your whole trading plan, but maybe just adjust it, maybe just refine it so you can get the better entries or better results. And then patience, guys. If you're not patient, you shouldn't be a trader, or you should be a scalper. No, I'm just kidding. But you should really think of patience as a superpower, in Forex, or not Forex, and day trading. If you have patience, that's really one of the best skills you can have, is patience. And there's a saying that says that it's a skill to not trade, like to stay out of the market. It's really a skill to stay out of the market because you're really looking for that perfect entries. To stay out of the market is actually better. Like I'm struggling with patience, and that's why I'm a scalp trader. But even with scalping, literally I take 2 or 3 trades a day. I don't take more than 2 or 3 trades a day. There's people that take like 20, 30 trades a day. Like, it's crazy. I don't know. Like, I was there because what I thought was like, yeah, the market's going up, I buy, and then I'll take my profit. The market's going down, I sell. And then I would be in drawdown for like 50 pips or like 100 pips. And then I would wait for the market to come back, and eventually the market comes back and I just close 10 pips profit. You know, all of that stuff, that's because you're impatient. And that also integrates with your discipline, because if you're not patient, and you lose, you're going to be impatient to make that money back, and you're going to revenge trade. And so all of this stuff integrates with each other, but it's very, very important to grasp that you have to have patience from the start, to wait for your setups, to wait for your profits, to actually realize that compounded interest is the 8th wonder of the world. Like, it's a massive thing. Like, if you can grow 10% a week, like 10% a week, like now on $100 account, that's $100 a week, $10 a week. So it doesn't sound like a lot, but imagine you have a $100,000 account. Now you're growing 10% a week. That's 40% a month. That's abnormal growth. Like, people aim for about 10% a month. Like 10%, between 10 and 20% a month. The big Forex traders that's really in this game professionally, they don't aim for much more than that, because they know that they want to be consistent and they're patient, and they're actually compounding their accounts. They're really growing it stably. If you grow your account exponentially, the chances are there that you can also lose your money exponentially and very fast. So it's important to realize to build consistently and patiently. Be patient while you're building consistently. So that's the 4 points. But yeah, so then I'm just quickly going to take you. Okay, I'm going to give Michal the mic now. You can talk, and then I think we still have a few minutes left. So yeah, Michal, you can go ahead.
Okay, all good. I just want to actually add on and build on what Moritz has already said. I'm going to drop onto both. I'm just going to integrate what we spoke about now on the screen too. I'm connecting with my laptop at the moment. There's a rule of thumb that goes in terms of psychology. If you can't deal with a loss, then you can't deal with the markets. And that always needs to be taken in consideration, because if you can't deal with the losses, I think my first mentor told me, listen, fund $100 account, blow your account, reset. And that was his advice. He told me, blew as much as account as you can, and then start learning. And for me at that time, it was like, this is really shit advice. I want to learn to make money. Then he told me, like, afterwards, the reason why I gave you this advice was because a lot of people expect that they're going to start making money from day one. But the first thing that they need to do is stomach the losses. They first need to realize, listen, I do have a losing day. I can't lose my shit. And I can't lose myself. I really need to focus on upping my skill. The moment you up your skill, let me just minimize this. That's when you're actually going to start taking profits. But before that, don't even expect to really move forwards, because a lot of people think that the moment they join Forex, they're going to make a lot of money. So just from my side, let's quickly run through the same things. In mass psychology, that's 90%, and then there's the institutional psychology, that's a 10%. And we're going to focus a lot on that on this Zoom. So just looking at this chart, what I can see is there's mass levels that the institutions look at. And in terms of psychology, if you really just boil it down, the Forex market just moves from one number to the next number. And I'm going to put around about 3-4 lines on this chart and just show you guys in terms of the psychology what happens. Okay, so we are currently in March, and we could see March started off with a lower high. Market had a huge drop, did a lower high. So we formed a level. Going back, that level was respected. What's the next level? It's there. Look how price literally just goes into it. So think in terms of institutions. Think in terms of the Forex market moving from one psychological round number to the next. So this psychological round number is 1-4 flat. Look how many times price respected it. It touched it, dropped, touched it, dropped, touched it, dropped. And then it just bounces off. Like this psychological number is 138. And price will always go from one psychological number to the next psychological number. So in terms of psychology, you really need to think in terms of the institutions. They don't try to overcomplicate, like if you go into the hourly, this thing is going to look like a mess. You're not going to know if the market is bullish, bearish, or sideways. Like, let's just go, excuse me. So yeah, that's when market started falling. Okay, so we know we bearish. Market started going up, could have a higher, lower high, higher low. Okay, we bullish. Takes the same resistance from the 4-hour and then starts falling. So you should never try to trade against the institutions, and that's mass psychology. Mass psychology is that they're going to confuse the retailers. The reason why they want to confuse the retailers is they want to take their money. So we should not think like what's like the normal trader. We should really grind down our craft and focus on certain levels. And I drew these on the 4-hour. You're going to find them a lot easier in the weekly and the daily. Let's just quickly go into daily. And in terms of psychology, we are always moving from one number to the next number. So look at that clean break of that bearish candle. Look how price respected daily for weeks on that level. Always came back to it, never broke it. So that's confirming we're still in sells. And then this level needed to be broken. That level was broken 3 days ago, telling us we are going down even further. And in terms of discipline, you always need to keep your levels on. In terms of analysis, as I said earlier, you draw your analysis once, and that's going to help you through the day. It's going to help you probably even through the week. Like this would have been analysis for the past month. We would just go from the one level to the next until we break. And then when we break, that's when we start resetting. That's when we start actually understanding, okay, now we have the potential further downside, but before we can go down, what does the market need to do? Has to go back, collect all of that volume that lies there. Say, okay, we're done now with these two levels. We're going to move on to the next two levels, and they're probably going to be down here. So in terms of psychology, what I want you guys to focus on, I'm going to give you just some pointers, is don't trade for this stimulation. If you're going to trade for stimulation, you are always going to lose. If you're just trying to get that rush of seeing that blue flick on your screen and see the profits running up and then never really collecting them, you're always going to have problems with your trading. You're always going to think in terms of a retailer. And then going into what Moritz said, clarity and your perception needs to be clean. Clarity is power. If I flicker through all of the pairs, you're going to see a correlation overall. Like let's say pound dollar. Look at this, bearish, going back retest, bearish. Okay, let's go over, like let's say as an example, AU. Look at this correlation, bearish, testing, bearish. Going over GA, this one's a bit more messy, but yeah, overall, yeah, bearish, retest, bearish, and now it's breaking up. So you're always going to see some correlation. The correlation will be GU, AU. Gold is correlated with the pound Aussie. So let's quickly go into gold. Yeah, on the 4-hour perspective, you're going to see it a lot more easier. So we have a clean break. Okay, so let's just take this month. Clean break down, up, down, inverse head and shoulders, start moving up. Always going from one psychological level to the next. So you see this clean breakout. Look how price goes back. Okay, I can't draw a line there now, but look how price goes back, retests it. Almost today, almost tapped it. So in terms of psychology, let's just go into AU. This is going to be actually a good one to go over. So let's see. Yeah, there was a resistance. And I remember it clear as daylight because yesterday it actually irritated the hell out of me. 24th. Look at this, just consolidation, complete consolidation for 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 hours. 9 complete hours of consolidation. So if you entered around here and you don't have patience, you're going to try to exit, enter, lose one, and that's going to really like nail you to the end. What I want you guys to start realizing is that structure is key. And in terms of psychology, when you really keep to basics, you're going to make a lot more money. So let's quickly go over it. Psychology, when you draw up your analysis is literally the easiest part. Taking the trade is the second step of the process. Just these two lines. So when market broke in March to the downside, what do we need to do? We had to go back up, find a level of resistance to go further down. Then we found resistance here. Look at this this complete consolidation. These are 4-hour periods, and then it moved. And then when it moved, it break out rapidly. That's the same thing that happened here. Look at this. That was from yesterday. Complete consolidation. Look at that breakout. Rapid downfall. We were already in a bearish trend. Looking at the 4-hour, look at that. We broke the support. We broke that support. It literally just came back to that retest. So if I had to draw that same thing here. So in terms of psychology, always keep yourself sharp. If you're not sure which direction the market is moving into, here's a cheat code. Go into the daily, put on both EMAs, and then kabam, look at this. We are bearish because the red is on top. That means the sellers are taking over this pair. When we're bullish, you're going to see the sellers like dialing down and the buyers taking in. It's going to be lagging, but it's going to give you a clear direction of markets. And then what can we expect? Structure is always key. So we're now breaking this structure. Where can we go? Next structure is there. So in terms of psychology, always keep yourself sharp. Always focus on what the market is doing. When you're going to go buying now, you're going to have a lot more losing trades and winning trades. When you're going to go selling, you're going to have a lot more winning trades and losing trades. So let's just go over it. In terms of psychology, there are always numbers. Numbers is the game that we play. So let's just put a small line here. But I really want you guys to focus on the psychology on the charts. Let's take this one, for example. We're going to keep that relevant for tomorrow's interview, tracking GA. Look at this. Okay, so there was resistance. No clear body could really break above that resistance. If you go into the 1 hour, you're going to see it literally as clear as daylight. Yeah. Structure will be there. Look at that. Same thing. Tapped it, fell. Tapped it, drop. And then now it broke the support. And now you can see it's tapping. And if it doesn't break, it's going to keep on falling. We are also moving into the Australian dollar region, which will come in at least 4 hours from now. So we can expect the upside to this resistance and then fall back down. So in terms of psychology, let's rather focus on what's needed to be focused. So tips. Keep an eye on your currency pairs. It's always painting a picture. Looking at this picture, back there, it gave us a clear 3-wick rejection on the 4 hour, telling us we're going down. And then when market pulled back up with that gap, it was just creating a higher low. Market structure. If you guys watch the videos on market structure, you're going to see structure is key, structure is king. And then for you guys starting out, call it a lower high. And then copy it. And then move as market moves. Move as market moves. Don't try to force it. Don't try to predict a bull run when there's a bear run. And we can see overall, look at that, still down. EMAs, we have that as our friend. Trend is your friend. So keep an eye on your currency pairs, paint that picture, paint what it is showing you and go with it. So putting in sells here is the best place because it's literally at structure. It's at the previous support, now needs to be resistance. And if you're not sure, ask us. We'll also give you an indication. The indicators are also a good support resistance area. Look, price always goes back into them. If it doesn't break them, it's going to keep on falling. Goes back into them, doesn't break them, keep on falling. Goes into them, falls. Same thing here. This is when the crossing actually happened. This gave you an indication. Same thing was testing structure, was testing previous support, now becoming resistance. So to spot your entries, this is a good way of going about it. The market always will paint that picture. You just have to flow with it. So take notes always of the highs of the days and the weeks, because that's going to give you an indication. So let's just quickly look over it. So yesterday we had a low. Look, the day before yesterday we had a low. Market tested that low and then dropped. So when you look at the overall bias, it's down. So then you just need to start opening up your trading view and realizing that analysis doesn't take long. I can quickly drop analysis for GU. Let's see GU for the next day. I'm seeing I'm running low on time, but okay, 4 hours. Let's look at this. So where's structure? There's structure. We broke. So what do we need to do? We need to come back and retest. We need to come back and retest structure before we can move into the next direction. So market needs to come up here. Market needs to test here. If we're not sure on the 4 hour, we go into the daily and look at the daily also, same thing. That was a huge bearish candle. That's a lot of volume. We need to come back and collect some of that volume. Market doesn't just like move into our direction once. It always comes back, collects volume, and then moves further downside. If you're not sure, volume also. Look, that's where volume is lying. Look at that. There's a lot of volume lying there. Market needs to come back and collect that volume. So you highlight those candles. Look at that. Exactly. That's where the volume lies. And that's also the candle that broke out. So that previous candle, there lies volume. Also, OVP levels would be around about here in this region. The reason why I say that is because this candle broke structure and it broke also the next structure. So this is where I would look for entries. And this is just psychological. This is just the psychology picking up where price needs to go. This is analysis. This is basically what we look for. The thing is not drawing now, but still. So let's look at the number quickly. What's the number? In terms of the psychological round number, it comes down to 38200, around about 38200, and then 38500. That's where the sweet spot lies. So if we can have a pullback up until there, wick regions into it, that's going to be a perfect entry for the downside. And this is just pre-analysis. This is not really taking a trade. This is just like determining where market can go, and that downfall is about 170 pips. Even here, we'll probably get 150 pips downside. So just further on is, in terms of what Moritz also spoke about, is that you need to manage your risk. When you have a $100 account, don't risk more than 0.03. Because that means you're going to risk at least 6% of your account. And in having a 50 pip run, you're going to gain. Let's just quickly look at the math. And I want you guys to start using this calculator, because it's going to give you a little bit more insight in terms of what to look for. Let's just take Euro USD. It has the same value of the GU. So let's say you have a $100 account. I know a lot of you guys are going to start out with that. You're not going to just put $1,000 in. If you have a 50 pip run for the day, that means you're making $15. That means for the week's $75. Not shit. That's a growth, 15% growth. When you go into like a higher account, it's a $1,000 account, you're probably going to go for 0.1. That means it's $50 a day. That's a really good growth. It's not a lot in terms of the $1,000, but it's a good growth. It's a risk to reward. So let's say it goes against you and you go 20 pip stop loss. That means it's $20 loss. Just make sure that you don't lose more than 3 trades. The rule of thumb is when you lose one trade, or you lose a trade today, leave the computer, step away and don't trade. Because what you're going to do is you're going to want to revenge. You want to make back that money, but you're not focusing because the first trade didn't go well, meaning you didn't do your analysis right. That's what happened with me on Tuesday. Monday, yes, I see time. Monday, we had a good run. Tuesday, we had losses. So I stepped back and said, we made targets for the week. We don't need to trade anymore, but we can if you want to. But then yesterday and today, I saw market is not tradable. Just consolidating. It's trying to choose direction. So yeah, that's on my side. Markets always move from one number to the next. You just need to realize that.
Yeah, guys, there's a lot to go into. And what Michal is explaining now is a bit intermediate and it is a bit advanced. But if you can grasp that from the start, this is golden nuggets. Like, this stuff is very valuable. Thanks for the guys that joined us tonight. For the rest of the guys, we'll send